Steps involved in accounting for business combination. There are 6 steps involved in accounting for business combination as per acquisition method. Acquisition method is also called as purchase method. Under that, step number 1, identify the acquirer. Step number 2, determine the date of acquisition. Step number 3, calculate purchase consideration transferred. Step number 4, recognize and measure identifiable assets and liabilities. Step number 5, recognize and measure non-controlling interest. Step number 6, recognize and measure goodwill or gain on bargain purchase. Under that, first step, identify the acquirer. Acquirer means who obtains control. Our entity which pays consideration is the acquirer. There is an exception to control or consideration condition is reverse acquisition case. In case of reverse acquisition, the acquirer will be different. Step number 2, determine the date of acquisition. Date of acquisition is the date on which acquirer obtains control of the acquiree. It is the date on which control is acquired by acquirer from acquiree. However, in certain cases, government approval is required for acquisition. Then date of acquisition will be date on which government is approved. Next, step 3, calculation of PC transfer, purchase consideration transferred. How to calculate purchase consideration? To calculate purchase consideration, fair value of cash or asset transferred as on date of acquisition need to be considered. Add fair value of shares or debentures transferred as on date of acquisition. Add present value of deferred consideration as on date of acquisition. Add fair value of contingent consideration as on date of acquisition. And add pre-combination period share-based payments awards to calculate purchase consideration. Next, step number 4, recognize and measure identifiable assets and liabilities. The acquirer shall recognize all identifiable assets and liabilities acquired and measure fair values as on date of acquisition. Next, step number 5, recognize and measure non-controlling interest as on date of acquisition. Non-controlling interest can be measured in 2 ways. First one, fair value method. Second one, proportionate share in net assets method. Fair value method means full goodwill method. By using this method, we will calculate fair value of shares held by non-controlling interest, that is minority interest holders. Next, proportionate net assets method. It is also called as partial goodwill method. It is calculated as a percentage of identifiable net assets. Last step, recognize and measure goodwill or gain on bargain purchase. How to calculate goodwill or gain on bargain purchase? Purchase consideration transferred plus non-controlling interest plus fair value of previously held equity interest in acquiree as on date of acquisition less identifiable net assets acquired. We will get goodwill or gain on bargain purchase.